All right, folks, so Max 7, weak all week. In fact, negative for the year. Not many people talking bubble anymore. Of course, though, you start looking at names like Tesla and Microsoft and Meta. They start to look really compelling down here. My next guest says you definitely want to sift through those and some others. So let's bring in now Miramar Capital, their co-founder, senior portfolio manager, Max Wasserman. And Max, before we start talking about opportunities, which is what the show is all about, let's just talk about the anxiety that exists right now. I started the show talking about this communique from Barclays, 50% chance of a severe supply shock. There's a combination of anxiety, fear, and frustration out there.
Right, and I'm going to say that I don't think the market's really pricing it in enough.
Right.
Because I think the risk premium is not being recognized. Everybody's expecting that this conflict, if they want to call it, in the Middle East is going to be over quickly. And I think it's going to take a little bit longer. And I think what you're seeing happening in Europe and Asia is going to have an effect on supply and demand. And we're going to feel it here. Even though the oil, 20% of it through the Straits really doesn't affect us, you're going to feel the prices here as people start trading it. And so I think we're going to see a slowdown in the market. And now with interest rates higher, does the Fed really cut as quickly as we wanted it? I'm
going to pick up on that. But when you say it's going to take longer to resolve, what's your definition of resolution? Because you just came from Israel.
Yes.
The definition of resolution for Israel is a lot different than for what the market's wanting to see for right now.
I think stability and predictability. That's what I mean from the United States point of view. They want to understand that the oil is going to flow and everything economically is going to be right. So from the market point of view, they want to make sure the oil is flowing properly, that there's no hiccups, and this doesn't turn into an Iraqi war. I mean, that's what everybody's looking at. So that's a definition of success, I believe, here. So if they can feel that the Strait of Hormuz is really controlled, and they don't have to worry about it, and Europe can handle with the oil prices and the shock, that the oil prices will come back down. So I think here, it's our pocketbook. That's a definition of success. When you have predictability in inflation and you have predictability in supply and demand. And that, I think, is going to take a little bit longer because the Straits are going to have their problems for a little bit longer than people realize.
Let's talk then about opportunities. And, you like energy and defense names here. General Dynamics, Lockheed Martin, those are two of your favorite defense names.
Yeah, we've had them for a while, so we're getting the upside of it. So you got to look at ammunition, right? GD is, General Dynamics is going to give you the ammunition, the calibers, the munitions, and all that. Lockheed's going to give you the guided missiles. So we think the demand with the spending by the U.S. government and demand worldwide, it's more of a safe trade I look at. In these times of conflict, people want defense companies, right? So I think that's a game. They're not cheap here, by the way. They've run. So it's not like I'd be running into buying them. But if you get a pullback, I still think it's a great place to be because of what's happening in the marketplace.
OKE and EOG, specifically in the energy complex, why those two?
Well, I think they're the lowest cost producers, EOG. So you have natural gas and oil. So they have long-lasting wells. Their return on capital is tremendous. And they're getting roughly 25 to 30% return on invested capital. And we like that. We're dividend investors, so that gives us there. We like One Oak because you get the pipelines, you're getting that gas. So we think they're going to benefit. And obviously Chevron, but again, they're not cheap. They've all had huge runs right here in anticipation. So we still own large investments in each one of these companies, but we wouldn't be rushing in and say this is a great risk reward at this level, but it's a good defensive play in predictability.
So there are areas, though, that have gone the opposite, the AI trade, right? So, and we started this segment talking about Mag 7 and other things. I guess a handful of people still talking concentration risk and bubble, but those comparisons were always nonsensical to begin with.
Right.
And now at these levels, this isn't the exact opposite of irrational exuberance. It might be irrational pessimism with these names.
I think what people they're going, it's like a pendulum. First they went too far, it's crazy. Now it's the world's coming to an end because there's no software anymore. So I look at companies like Microsoft, we still like, they're not cheap, it's gotten hit, but if I'm looking at asymmetrical returns, I think you can buy into that. We have a big investment. Broadcom, again, they have the VMware for like 50% of it. The chips, they're in programmable chips. We think they're going to be positioned well. So these type of companies, we think they're going to do really well. And Google, with the Gemini, nobody wanted, by the way, I was on your show about a year ago.
I know.
Nobody wanted Google.
Ironically, Google was the loser last year at this time.
So now,
they came into this year the winner.
Exactly. So I think when you invest, you got to say, who am I willing to hold for another 10% sell-off? because it can happen. This market can easily give it up.
Sure.
But if I want to own good investments, good companies, they're not going away. And I think long term, you're going to make some good investments here. And I also think some of the financials, because the financials they're throwing out, right? And we talked before about private credit, right, Eric? But we think companies, solid balance sheets that are getting hit, right? You're going to have some more of a washout. And I agree with you on your previous segment. A lot of people are like, where are they now when they were pounding the table, right? But I think a company like, we have an investment in JP Morgan, strong balance sheets, they can withstand any of this. Even like financial companies like Visa, things like, we like them, but you have to look longer than the next 30, 60 days because this market's volatile.
And they just got also the big news that might have been the biggest news of the week and the other week with the lower cap standards for these banks, which they've been wanting for a long time.
They've been waiting. So I think they're positioned well. I think they're really positioned.
Good stuff, Max.
It's always good.
So the moral of the story, get a little defensive and then be ready to go
be ready to take advantage of this.
Good stuff. Appreciate it.